Julian Emanuel, how does Ed Hyman's acclaimed granularity and study of the American corporate economy infect this new view that you have?
Well, what it does, Tom, is it reinforces the idea that our base case continues to be that there isn't going to be a recession. And we've had waves of concern, obviously economic hurricanes maybe offshore, so on and so forth. But Ed's granular data says we are not at the point where there is likely to be a recession, yield curve or no yield curve. And frankly, what it does, though, is when you look at the macro environment around you, it increases the probability of a recession off in 2023.
Julian, why the change? Why the change yesterday evening?
Because really, when you look at the move off of the low on May 20th, and you think about, how these kinds of bottoms form, and to be clear, our view is that you are in the midst of forming a non-recessionary bear market bottom. That's the base view. But what we haven't seen is that fundamental catalyst, and we all know that the biggest fundamental catalyst is falling energy prices, and, we look for it every day, and it is not happening. But then the other thing is volume. It tends to be when you get bottoms of that nature that you see surges in volume, real concerted buying interest. That's lacking.
Julian, the downside case, the bear case, 2,900, is that the recessionary bear case, and where does the number come from?
So basically, if you look at recession bear markets of the last 100 years, the average is down around 41%. That gets you to 2,900. We're not going there unless we get a recession.
You talk about oil being the distinguishing feature between that recession, that downside scenario, and not. What is the pain point in oil that you're looking for?
Well, so, Lisa, I think it's pretty fair to say that when you think about the consumer psychology, and look, you heard the president address it last night on late night TV, is that the psychological pain point has already arrived, whether it's $5 a gallon or whatever you want to define that as. But frankly, when you look at historical data, the longer prices stay elevated at this level, the closer you get to the actual pain point.
I couldn't believe, Lisa, what the president said last night on late night TV.
He was very real in trying to address the American people. Julian, you say that, it's about how sustained this is. What about the bull case? What has to happen in order to get to 4,800 at a time when people want to hear the bearish case and want to understand how much downside they have?
We need to see visibility into the idea that this so-called softish landing is really going to crystallize. And our fear here is that, again, there's only so much the Fed can do to get, to put a lid, and not only put a lid, but take energy prices down. And really, they can't do much at all. And that, we've seen more hawkish rhetoric out of global central banks in the last week. We're likely to see that next Wednesday. And the fear is that, that it doesn't move inflation materially lower. If you get that break in inflation and you get consumer spending to stay hold in there, that's where we get the upside.
And that's the September pause as well, Julian. Do you need the September pause to get that 4,800 bull case?
Not necessarily, and frankly, the whole concept of both volatility around the macro and economic volatility, whether driven by inventories or a number of different issues, it is such a long time between now and September. The picture is likely to look almost entirely different. So we don't know exactly what monetary policy is going to require, but we do know that inflation is going to need to turn down meaningfully without a turn down in growth.